All right, welcome to The Explainer. Today, we're going to tackle a term you hear all the time in financial news. I'm talking about a concept that is absolutely key to understanding the stock market, and that is market cap. If you're just getting into investing, all this jargon, it can honestly feel like a secret language, right? Almost like it's designed to be confusing. But what if I told you there's just one simple concept that pretty much unlocks the whole thing? Seriously, it's the key to figuring out the actual size and scale of any company out there. So yeah, let's dive in. Okay, so we're starting with the big one. This is probably the single most important number for figuring out a company's size and where it fits in the market. I'm talking about market capitalization.
So, what is it? Well, put simply, it's the total price tag the market has slapped on a company. It's not about their sales, not about how many factories they own. Nope. It's about what all of us, the investors, collectively think that company is worth. Like right this second.
And the best part? The math behind it is surprisingly simple. Anyone can do it.
Now, this little formula, it actually points to a classic mistake a lot of new investors make. It is so easy to just look at that stock price, the first number in the equation, and just assume you know the whole story. But that's a huge trap, because it's only half the picture. Okay, just look at this for a second. You see two companies, both trading at $50 a share. Your first thought might be, hey, they're the same size. But whoa, not even close. They could not be more different. See, Company B has 1,000 times more shares out there. That makes it a mega cap giant, while Company A is, well, a much smaller fish in the pond. And that is why market cap is so important.
So, think of market cap as our sorting hat. It lets us put companies into three main buckets. And each of these buckets has its own personality, its own level of risk, and its own potential for growth. Let's break them down.
All right, first up, we've got the titans, the giants of the market. I mean, you probably use their products every single day without even thinking about it. These are what people call blue chips. And yeah, that name comes straight from poker. The blue chips are the most valuable ones. Same idea here.
I like to think of these guys as the giant, steady battleships of the investing world, right? They're huge, they're stable, and they're not easily rocked by market storms. They often pay out dividends, which is a nice bonus. Now, because they're already so massive, their explosive growth days are probably behind them. But what you get instead is stability and predictability.
Okay, next up, we have the challengers. These are the companies that are really in their sweet spot for growth. They're kind of sandwiched right between those giant battleships and the smaller, newer guys. So, if the large caps are battleships, think of these mid caps as the nimble destroyers. They're faster, they're more agile, and they've got a lot more room to maneuver and grow. They've already proven that their business works, but they still have a ton of potential to get even bigger. These could be the giants of tomorrow. And finally, we've got the innovators. These are the up-and-comers, the businesses that are often playing with new ideas, disruptive tech, or jumping into niche markets that the big guys might have totally ignored. To finish our analogy, these are the high-speed boats, super fast, super agile. But they're also way more sensitive to choppy water, They carry the most risk for sure, but they also have the potential for absolutely incredible explosive growth if they hit it big. And this chart really lays it all out, doesn't it? It's the fundamental trade-off of investing. As you go from large cap down to small cap, the potential for growth goes way up, but so does the risk. It's a spectrum, and where you decide to play on that spectrum really just depends on your own personal goals and how much risk you're comfortable with. Okay, so now you know how to sort these companies. You get the whole risk versus reward thing. But the big question is, how do you actually use this stuff to build your own portfolio? Well, the key is a word you've probably heard before, diversification. It really just means not putting all your eggs in one basket. By spreading your money across different cap sizes, you're building a balanced team. You get the steady defense of the large caps combined with the high-scoring offense of the smaller guys. So for instance, a balanced portfolio could look something like this. See how half of it is in large caps? That's your foundation, your stability. Then you've got a good chunk in mid caps for that solid growth, and then a smaller slice in small caps to give you a shot at those really high returns, but without betting the whole farm on it. It's all about balance. All right, so market cap is an awesome tool. It really is. But it's not the whole story. And before we finish up, it's super important to talk about what market cap can't tell you. This is a really, really important point. Remember, market cap is based on the stock price. And the stock price is all about what investors are feeling. It's about sentiment, emotion, hopes for the future.
That means it can swing like crazy based on a single news story, even if the actual company, its profits, its assets, hasn't changed one bit. So remember, market cap is a measure of perception, not necessarily the cold, hard, actual value of a company.
And just so you know, if you really want to get granular, analysts sometimes slice it even thinner. You'll hear terms like mega cap for the absolute biggest of the big, and micro or nano cap for the teeny tiny companies at the other end. Each has its own unique flavor of risk and reward. So there you have it. By getting a handle on this one concept, market cap, you've basically gotten a decoder ring for the stock market. You can understand the news better, you can analyze companies more clearly, and you can start to build a strategy that actually makes sense for you. So, the only question left is, what's your next move? Thanks for watching.
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.